As the primary brand of Smithfield Culinary, we take pride in offering a huge array of high-quality pork products. There's really something for everyone, helping you satisfy every crowd, every time. Visit us at smithfieldculinary.com/Smithfield.
Hi, and welcome to this week's episode of Extra Serving, a Nation's Restaurant News podcast. I'm your host, Holly Petre. While some brands are thriving, we will talk about that with Alicia Kelso later, there are plenty of brands that have been struggling. Many of those have either declared bankruptcy or are rumored to be declaring bankruptcy. Tijuana Flats and Oberweis both declared Chapter 11 this week, and the rumors behind Red Lobster are strong amid its new CEO. There's also the Boston market saga. So does this signal that smaller players are dying? Also, we're going to be talking about the Starbucks court case. Starbucks took one of its battles with the National Labor Relations Board to the Supreme Court. Not only does this have implications for Starbucks and its unionization movement, but larger implications among unions across the entire country and the power of businesses and employees. Finally, we're going to be talking about the sale of Tropical Smoothie Cafe. Rumors began in December 2023 that the brand could be sold for $2 billion, and that's just what happened. Blackstone, the private equity company that was rumored to be buying Jersey Mike's, bought the smoothie chain for that exact amount on Wednesday. This is our first big sale of 2024. Are we heading for a big year? This week's guest is Skye Anderson, President of Global Business Services at McDonald's. And now it's time to introduce my lovely co-hosts.
I'm Sam Oches, Editor-in-Chief of Nation's Restaurant News.
And I'm Alicia Kelso, Executive Editor of Nation's Restaurant News.
You guys have such fancy titles. I'm just host.
Oh, you sell yourself short.
Yeah,
host.
Titles are what we call a facade.
It's weird that your business card says just host.
Yeah.
I think it's funny that in 2024 you think I have business cards.
True. I haven't ordered any of those for a long time.
There's like a LinkedIn thing you can scan for your profile, like when you send it to people, which is the smartest thing ever.
I forget my business cards on every trip now, and inevitably I have a moment en route from my house to the airport where I'm like, I forgot my business cards. And then I remind myself, oh, I'm never going to give another one of those away probably. So what does it matter? Because once upon a time, it was like if I forgot my business cards, like for the restaurant show in Chicago coming up, I remember once upon a time, I forgot my business cards and I'm like, why even bother going? I need business cards.
What is the
now
point?
I'm like,
They're all going to miss me.
Exactly. But how will they remember me?
That's when you start just scratching your information on a piece of paper.
That's right. That's right. Go old school.
That's right. Back in my generation.
Handwriting for that. It's key.
And
I'm
I
assuming you do
have
not
that.
have good handwriting, Sam.
No, I don't. It is unfortunately a skill I did not get.
Just looking at you, I could tell it wasn't good handwriting.
I don't know if that's a compliment. I don't know. I'll take it as such.
I mean, you don't give off those kind of vibes, you know?
Well, it's the tortured artist creative thing, right? I think creatives tend to not have good handwriting because there's just so much going on in their head.
A Taylor Swift reference. I was like, cool. Talk about this.
Well, as a tortured poet with bad handwriting.
I mean, mostly doctors, I feel like, have bad handwriting and young boys. So, you're right on track.
Wow, I don't even know what to say to that other than maybe let's move on once we get to the doctors and young boys. Okay.
That was the next thing. Not great. All right, so let's talk about some craziness in the financial sector. So we saw a few brands declare bankruptcy. We've had these rumors about Red Lobster, which, after their new CEO took over, everybody kind of expected. That would not really be a surprise. Boston Market would not really be a surprise, but we've yet to see either of those two brands declare bankruptcy. But we saw some smaller players. Oberweis used to be down the street from me in Chicago, so very familiar with them. Delicious ice cream. Sad to see them go. So what do you guys think about kind of this arena of brands that are not doing great, because we're going to talk a little bit about brands who are doing amazing.
I think the main takeaway here is to note that I don't think there is necessarily a connective thread among these brands that have either filed for bankruptcy or are rumored to be filing for bankruptcy, because I don't think it's a particular size of company. I don't think it's a particular category. I think it is, what was your ability to survive and thrive in a post-pandemic climate? It really seems like, yes, we are 4 years plus on from the beginning of the pandemic, call it 2 years on from really the worst of it. And so in theory, you would think, we've kind of sorted ourselves out, whatever. I still think there's a lot of companies out there that just couldn't get their crap together. And this is emblematic of that. You see some companies that just could not get a footing. They could not reclaim attention with their core customer in a post-pandemic environment. Red Lobster is a good example here, which is, and again, these are rumors, so nothing definitive here yet about them filing for bankruptcy, although, they brought in the so-called Grim Reaper as the CEO, whose job it is to famously to come in and restructure companies who are struggling. That's a good example of a company that really got hit hard by the pandemic. This is a full service company, and with its seafood focus, I just don't think it could not figure out life in a digital forward, off premises heavy environment quite like some others, like sports bars or some other full service like American chains could have figured that out. And so, now that time seems to be coming where it's kind of, it's going to hit bottom. I wouldn't say that, though, again, it's not emblematic necessarily of the product or anything else other than just to say this particular company could not pull it together in the climate that we find ourselves in. And so now has to reach for that last ditch option.
Red Lobster is so interesting to me. It's like they can't shake. It's like they can't find their identity in a post-Darden way.
Right.
What was that? When did they spin off? 10 years ago? Longer? It's been a long time.
Was it that long? Holy cow.
It's been a while.
I was going to say 5. So what do I know?
I mean, they just can't seem to find their identity.
While you talk, I'll Google.
Okay, good. Because we want to be accurate here. But yeah, this is I think this week has been obviously very dizzying on the bankruptcy news front, and last year was too. The Band-Aids are simply ripping off. If we look at last year, 2023 had the highest rate of bankruptcies across sectors in 13 years. And the restaurant industry was certainly not immune to that. I mean, we had major franchisees from very well-capitalized brands. Burger King, there was a McDonald's franchisee, CKE, Popeyes, Denny's. Franchisees from all of those brands declared bankruptcy last year. So the Band-Aids, like I said, and sort of alluding to Sam's point, are ripping off. The fact of the matter is, yes, we are normalizing, and yes, we are in a post-pandemic environment, but this environment is still very, very tough. And, the supply chain might be correcting itself, and construction costs might be starting to come down. But at the end of the day, labor costs are the highest that they've ever been. And once that genie is out of the bottle, that's not going back into the bottle. We also have a really interesting scenario happening right now on the real estate front, where we have historically high rates of lack of vacancies. So like the Houston market, and I was doing this research for our print publication coming out of May, so it's very top of mind. The Houston market, for example, only has 4% vacancy rate, and the sharks are circling these markets because this industry wants to grow. But if there's that low of a vacancy rate, then what happens? Well, costs get higher. Occupancy costs, one of the sources I talked to for my print feature for May, occupancy costs, she told me occupancy costs are typically 10%. They're about double that now, And so when you think about that, along with labor, and then you cannot forget that cost of capital right now is, the Fed has raised interest rates, it's not come down. Interest rates haven't come down. So plenty of operators in this industry are used to, taking capital when debt was cheaper. And now they're on the hook for this debt when it's anything but cheap. So they've leveraged too much simply to stay afloat. And then they've, consequently fallen behind on vendor payments and, violated covenants and kicked the ball down the road on rent. There's just a confluence of issues, right now. So I think what's happening is that's starting to rear a very, very ugly head. I think we're early days here. Unfortunately, you guys know me. I'm as Pollyannish as they come. But I think that we're going to see more before we start seeing some of these issues, these challenges plateau. And I think that the concepts that tend to be a little bit more commoditized, those that aren't differentiated, that aren't experiential, that don't provide the convenience that customers want right now, I think they could be in big trouble. And of course, that don't have the cash flow to support the debt that they've taken on. I don't know. But here at my Pollyannish comes back. This industry has always had challenges, the ebbs and flows, and I think we'll get past it.
Yeah, it's interesting. I mean, you are correct, by the way. 10 years, 2014 is when it spun off from Darden. So well done.
Thank you.
They ran out of runway, right? I mean, because, it's not a funny thing, but we do laugh about it, which is we've been saying, ooh, the economy's going to turn around any day now, right? I mean, we go from it's a recession to investors are coming off the sidelines in about 3 days. And, nobody has this is an unprecedented economy. That has acted in very unusual ways. And unfortunately, to your point, Alicia, I just feel like so many of these companies have just, they ran out of gas, right? They were running on fumes already, and they ran out of runway before things could turn around, before the capital could become more affordable, before they could stretch themselves a little bit further, before they could figure out how do we get customers back in the door. And that's another piece of this, right? I mean, everybody's struggling on traffic except for Chipotle, apparently. If you're not Chipotle
and Texas Roadhouse,
you don't know how to get customers in your door right now. And everybody's fighting for the same customer, right? Mm-hmm. Now, Red Lobster's fighting for a relatively niche customer. And so when your pool is already thin from which you are fishing, no pun intended, you're just not going to catch a whole lot of fish. Wow, I came up with that right on the spot.
I mean, that's pretty good.
Thank you.
That was pretty good.
I'm going to go ahead and just make sure I write that down on paper so I don't forget. But anyway, so that's where you have this climate. Now, something like an Oberweis, that's really interesting because, gosh, I mean, ice cream, ice cream's always good, right? Everybody always loves ice cream. And so I think there are some competitive factors here too, which is that, it's not only did you adjust to the new climate, but it's also, again, how many competitors are out there? How many customers are you fighting for? Against, what other brands, because we do have a lot of success stories out there that are growing quickly, that are taking advantage of some of those opportunities that are out there. And that includes a lot of snack brands. Certainly we're looking at the coffee industry doing very well. Ice cream in particular, I don't know if it's necessarily the hottest category, but it can, grow a lot more in a much more nimble fashion than a lot of other restaurant companies can. So a variety of factors, as I'm sure we've now kind of beaten this dead horse, but just to say that there's just it's not the greatest climate out there for a struggling restaurant company.
Do you think we're going to see more of this now with California's minimum wage increase? Do you think that's going to just push more brands further over the edge who were struggling? Do you think we'll see another wave of that?
Only in California, right? I mean, because it's going to be a long time before this ever trickles into other states. But certainly California, yes, I won't be surprised if we see some more of the dominoes fall from that situation.
If I could jump in real quick, it's easy to say that this environment is tough, and on paper, of course it is, and in practice it is. But in the case of Oberweis and further Tijuana Flats, those companies blamed things other than macroeconomic pressures, which I think is really interesting. And it also underscores that this industry is full of challenges regardless of macro environment. Oberweis mentioned that they didn't keep up with distribution demand, and that shot them in the foot. So if we talk about the state of ice cream right now, it wasn't keeping pace. And then Tijuana Flats, they blamed a very complicated menu, which I thought was really interesting, among other things, of course. But again, there's a lot that I think it underscores the complexity of this industry. If you can't get the P&L, to work, that's one thing. But if you can't get the P&L and all of the other things that go into this industry to work, then it's going to be a problem.
Alicia, you and Sam both mentioned Chipotle, and they just reported, but that's kind of on the exact opposite side. I mean, Texas Roadhouse is something we'll talk about probably in a week or two. But Chipotle just reported, and they are such a success. Like, it's unbelievable. So I mean, and they were a brand that jumped back from a really hard early aughts when they had that foodborne illness, and they bounced back in a way that is pretty impressive. I mean, so can you tell me a little bit about the earnings and what, made Chipotle stand out?
Everything. Okay. I mean, I was listening to that call last night. I was like, whoa. I mean, they just have a well-oiled machine right now. And they find Chipotle is unique in that it's company owned. So it has a lot of control mechanisms in place where, a McDonald's wouldn't. So, I think it's to off the get-go, it's a unique beast in that way. In doing that, it's able to control, for example, this throughput focus that they've had since I think July 2022, where they recognize, we lost a lot. We had a lot of turnover in the pandemic, just like everybody did in this industry, and it's really messing up our operations. Our accuracy is bad. Our speed has suffered tremendously, and it's impacting our sales, because we have less throughput and so on and so forth. So they put this initiative into place in July 2022, and it simply focuses on the back to basics fundamentals of operations. Is the food on the line being replaced as it runs out? Is the bagger or the expo area where, is that person where they need to be at all times, especially when they're, during peak times? Chipotle really focuses on throughput at those 15-minute increments during their peak times. They talk about this every earnings call, and it's down to a science, and it's steadily improved. Well, as it turns out, when you are able to generate higher throughput during those peak times, it generates higher sales. So go figure, but we've been talking about this throughput for the past several quarters now, and CEO Brian Nichols said that we'll be talking about throughput for the foreseeable future, because that's how important this operational piece has become to Chipotle. I want to dive a little bit deeper into this, though, because their traffic was up mid 5%, I think, and it's more than just pushing more people through the line. Chipotle has had a lot of success with their, well-timed LTOs. Chicken al pastor has become such a success. They brought it back in March. Mark Kalinowski wrote a note that they're worried about the supply. He actually said that that dish is so popular that they believe Chipotle has told employees not to eat chicken so that they can hold their supply. That's a stunning note. I've never seen that. Another thing that kind of surprised me, their barbacoa, they did research and their consumers didn't know that was braised beef. So they renamed it braised beef barbacoa. And that led to a significant increase in traffic and check. Like, these are really simple, fundamental things that the company is able to execute on, again, because they're corporate owned. Imagine how hard some of these things would be if you had to extend it to your huge franchisee base. But again, they've got a cadence and they're moving and grooving. I want to say one more other thing that kind of struck me real quick. They have a pretty big California presence, and they raised their prices by 6 to 7%. It hasn't impacted their traffic there yet. Obviously, it's early days. But what fascinated me during the earnings call is their in-store traffic was their fastest growing channel by almost 20%. And they said that was at even offset or at the cost of, there were more people coming in store during Q2 than there were mobile order ahead. And, this is a company that is putting a lot of time and money into the Chipotle model. 80% of their new builds will be Chipotle. I don't think it's a problem. I think any volume is good volume, regardless of what channel it comes from. But we know order ahead tends to be higher check and higher frequency. So I think that's something interesting that we'll continue to watch.
Yeah, the only thing I have to add to that, because that was all really hit the nail on the head. But I mean, really, since Holly, you compared to sort of the early days for Chipotle, not the early days, but 6-7 years ago, the big difference for Chipotle with Brian Niccol and the new corporate team that he brought in is this willingness to improve, enhance, and change it all. I mean, the previous regime was so dug in so deep on what Chipotle was to represent. And that was the food with integrity. That was the sourcing, the quality of the food. I mean, I think famously somebody said that they used to take, it was Brian Niccol himself, somebody told me they used to take delivery orders by fax. I mean, still into like 2014, 2015. And when you think about the Chipotle of today, I mean, that's a different company. And so Chipotle did this wonderful job bridging its core offering that resonates with consumers, which is good, fast Mexican food, with the nimbleness, the flexibility, and certainly the innovation of the operation, which has included the Chipotlane, the automation in the kitchen, improving the throughput. As Brian Niccol used to say a lot, I don't know if he still does, but always about the removing the friction from the order points, right? So they've really removed that friction, made it as easy as possible to access their food. And they've still maintained that more or less that high quality of food and more or less the price point comparable, at least, as it relates to inflation and everything. So it's all around a big win. And I think that's why we see them doing so well, which is that they were able to innovate in the operation in a way that the previous regime just did not tend to do, while maintaining the quality that people are looking for. And it was the perfect match that's, they're riding that wave still well into the future, I'm sure.
Well, Alicia, I remember you wrote that story maybe 6 months or a year ago that Chipotle still had all this room to take pricing because they were considerably lower priced than their competitors. And so they had all this space to take this pricing that consumers were willing to pay for. And maybe that's what we're seeing as a result.
Could be, in response to these traffic gains, Niccol did say on the call, it's across demographics, income demographics, lower, middle, higher. It's broad-based was the term that he used. And that's interesting to me because, we've heard Wendy's, we've heard McDonald's come out and say, and they have not reported Q1 yet. So this is Q4 still, but they've come out and said, we are experiencing navigating some declines from the lower income consumer. So it all comes down to value proposition. Everybody's raised their prices. Everybody has. So at the end of the day, what is perceived higher value? Is it a burrito from Chipotle? Or is it a QPC from McDonald's? I don't know the answer to that, but I think that, when we see traffic gains at one and traffic losses among one income cohort and another, that's starting to play itself out a little bit more. There was research from BTIG that did indicate Chipotle versus its fast casual competitors is lower priced by about 10%. I don't know if that's still the case because they have continued to raise prices, but we're seeing results. So, the proof here is in the pudding.
I mean, like for me, I perceive Chipotle as having more bang for your buck than a lot of other brands. Like even like a salad chain, I feel Chipotle is heartier, has food that'll keep you fuller, longer. And I mean, that's my opinion, but I think it's something that's common among a lot of people my age that I've spoken with, that Chipotle is looked at as more of a heartier option that maybe you could even eat for 2 meals versus a lot of like these other competitors that, are a quick meal, you're not exactly full. Now I want Chipotle, and I thought about placing an order while you guys were talking, but I decided against it.
Can you multitask like that? You know what? What's interesting about that, Jonathan Mays from Restaurant Business and I were actually talking about this back and forth a little bit. There's a disconnect here when it comes to Chipotle. There's a huge virality happening on TikTok, especially TikTok, but other social media platforms that I'm sure you guys have seen, where people are like raging against the Chipotle machine because they believe there's been a degradation of product, a degradation of, a sort of a shrinkflation effect. From Chipotle. It's not the same. And every time I sign on to TikTok, I'm like, oh, these people really hate Chipotle. And it's all I see. And when I say virality, these are getting millions of views, but they're not showing it in the traffic. They're not showing this in Chipotle's results. So maybe it's a vocal minority. I'm sure most things on social media are.
But there's a perception out there that is disconnected from reality as it pertains to the results.
Well, and I know that this has become the Chipotle podcast, which is like not even on our plan for what we were going to talk about. But to, I guess, sort of tie this up in a neat bow, just thinking about that point, Alicia, because you're so right. I hear from a lot of friends like, oh, Chipotle's not good anymore. Like I get that just person to person, people tell me. And yet, and if we point back to the Tijuana flat situation, I just think that even though it seems like to us, there's a ton of competition out there in fast casual Mexican, truthfully, that's not actually the case in a lot of communities, because what Chipotle's done that a lot of the other brands have not done is it's successfully started to move into smaller communities. And, if I think about, I've probably mentioned this on the podcast before, but my hometown of Athens, Ohio, has had a Chipotle since 2007. I remember when it opened because it was a college town, line around the block for weeks and weeks. It remains the best so-called fast food option in town 17 years later, and is still gangbusters, line out the door every time I'm in town, because it's the best thing going for it in a small college town. And it owns that same kind of reputation in countless other small communities. It's the only thing that is an alternative to Taco Bell. And, all love to Taco Bell. Taco Bell, I think, tends to serve a different use case. It tends to be more late at night, or it's more value oriented. So for those who want quality, fast Mexican food, Chipotle is the place to go. And I just think that whether or not you think it's different, it's changed, it's worse than it used to be, you're probably still going there because you're still craving that kind of food, and it's your best option.
Well, that kind of goes right into our next story, is that this Tropical Smoothie Cafe sale, big chain. They're one of the biggest in the smoothie section, if not the biggest. We saw the rise of the snack segment. We're seeing these specialty drinks get bigger. And, they were just sold for $2 billion. So if that's not a vote of confidence in the business, I don't know what is. They are not public, but they, release their own sales, that they've had positive sales for like 12 quarters or 12 years. They're doing great according to the company. So, this is clearly a vote of confidence in the segment. But what do you think this sale, really means for this brand and moving forward the segment? Because Blackstone also talked about Jersey Mike's, which we'll maybe talk about. I don't know. Side note. But let's talk about Tropical Smoothie Cafe first. Do you think that this is a sign that the snack category is just about to skyrocket?
I don't think just about. I think it is currently, right? I think that, first off, this is validation of Tropical Smoothie's success over many, many years. CEO Charles Watson, I think he's been there maybe 5-6 years by now, but he's done a phenomenal job at the helm of this brand. And, they have just done a very good job expanding thoughtfully through smart franchise partnerships. But most importantly, they've really come to own the smoothie category. Arguably, of course, you have Smoothie King as well and Jamba, but I just feel like Tropical Smoothie has really is more out front in the consumer's mind. Certainly, I think it has been for us. In a way that has really benefited them. And so to your point, Holly, though, the snack category in general has been really taking off. And if we look back to our America's Favorite Chains report from January, Tropical Smoothie, Dutch Bros, a snack and in particular beverage concepts were doing extraordinarily well. It was like all snack and steak. It was the most interesting thing, right? Because you think to yourself, why those two? And of course, when it comes to your favorite chain, a steak, probably because of the great experience you get, you go there for birthdays and anniversaries. And for these snack and beverage concepts, it's probably because you're going there certainly multiple times per week, if not every day. It occupies a very special place in your lifestyle. I think Tropical Smoothie has really embedded itself into so many people's lifestyles because, like a coffee, it's very accessible. You can go through the drive-thru, get your daily smoothie. They locate near a lot of exercise facilities. They want to be a part of your lifestyle. And as we see in this post-pandemic time, more and more consumers kind of spread out their dining occasions outside of the traditional day parts, as we see snacking become just more and more top of mind for consumers. And we see off-premises channels and digital ordering, all of that really fueling this ability to get whatever you want, whenever you want. those snacking options are really taking off. So I just think Tropical Smoothie is part of this generation of concepts that also includes the coffee brands like Seven Brew, like Dutch Bros, that are all growing quickly and meeting this growing demand for something outside of the traditional day parts.
Yeah, and let's not forget Blackstone recently invested in Seven Brew. So, I think that was in February. I wrote about it. I can't remember when, but you want to talk about vote of confidence. These are fast growth concepts in a certain segment. There was the Jersey Mike's rumor that has yet to come to fruition. If it ever does, who knows? But when we talk about Blackstone in general, I think has over $1 trillion in assets. They do focus a lot on energy, but in the consumer space, it's mostly been like hotels, and it seems like they're sort of, extending their tentacles a little bit more in the restaurant space, as evidenced by this acquisition and previously the Seven Brew investment in February. So that could be a bigger story. I don't think we're done talking about Blackstone here, and the company's interest in this space as it pertains to tropical smoothies specifically. The smoothie category, as Sam mentioned, is obviously just staggering right now. Tropical Smoothie has the most robust menu of all of them. They've got sandwiches and salads. So when we talk about use cases, you're hitting on everything there. You can go for I wrote like a month or so ago about how some of these bigger chains like the Taco Bells of the world are adding, more intentionally adding, these special traffic, these special occasion items to the menu because all these specialty concepts are popping up and growing. So if you want a shake, you might not go to Taco Bell. But now, they're trying to sort of protect themselves against these fast growing snack or special occasion concepts that are growing really fast. For Tropical Smoothie, it hits on all of it because they do have a food menu as well. And I think that's really attractive. I also want to zoom out a little bit here, because this to me indicates maybe the mergers and acquisitions market is warming up a little bit. Which I think is good, which is also weirdly ironic given how we opened this conversation with the devastating bankruptcy. It's just such a bifurcated market right now, and I think that is going to increase between the haves and the have-nots, and I think this is a good example.
Sam, you went off mute. I thought you were going to say something.
I was going to say haves and have-nots, but Alicia got to it before I did, so.
She got your joke first.
I'll get you, Kelso.
I feel like Alicia's pretty good at dad jokes, too. I feel like you guys could compete pretty well on that.
I mean, but does she have a dad joke calendar sitting next to her like
Yeah,
I do? I don't think so.
I don't.
Hold on a second here. Oh, and it's food related. Today's.
Oh.
I had a hen who could count her own eggs. She was a mathma chicken.
Oh, we should make this
All
a
right.
segment, Sam.
Oh man! All right, we got 3 minutes to wrap this up. So
I think we just
Joanna and I did a podcast on the Starbucks Supreme Court issue. I'm going to link it in our show notes.
Smart.
Go listen to that because Joanna is the expert more than the three of us. So definitely go and listen to that. It's really interesting, this kind of issue that the unions are going to have that has really far-reaching implications. Very cool, very scary, very interesting. So definitely listen to that. Do you guys have any last words for our listeners before we depart?
I'm
like
so
advice?
sorry.
Good luck. What is it? Go forth and prosper? I don't know. Cheers.
All right. Well, I'm going to kick it over, Alicia, to your interview with Skye Anderson, the president of Global Business Services at McDonald's. But I'm going to thank both of you for joining me today and for all the advice you've given.
Thanks for having
Holly.
me.